Robschild. Nothing I say is investment advice. Welcome to the show, where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. Today is Monday, June 17th, 2024. In today's episode, we are going to start with noting that markets are closed on Wednesday for Juneteenth. National holiday. None of the exchanges are open for trading, so no selling, no buying ETFs and stocks, options, anything that day. Also, we're going to take a look at TLT patterns. It seems all the stars are aligning for a pretty nice bull market in this fund in long duration treasuries. And then I want to discuss momentum feedback loops. Before we get to all of that, I want to mention that the major economic data coming out this week is on Friday, where we have flash PMIs. And then the next really big report is next week on Friday, the Fed favorite inflation gauge, the PCE, personal consumption expenditures. How much are people paying for stuff? We'll start with the S&P 500 closing at a new all-time high. My understanding is that most of this motion today was caused because of Apple, one stock. It's amazing. We are in times now where there is so much weight in the S&P 500 on some of these mega cap stocks that just one stock like Apple can rise all ships to dangerous levels. Again, on a technical basis, this is as bullish as it can get. When things go up, they tend to just keep going up. People buy these mega cap stocks at extremely high valuations. If you've been seeing any of my recent videos coming out regarding the intelligent investor, I'm going over chapters of that. I also had a special edition recently where I talked about how you can tell basically if stocks are expensive or cheap, and Graham would just be shaking in his boots right now up here. But, you know, this is the thing. This is where I want to bring up the point of momentum feedback loops, right? So how does this work psychologically? Well, I bought Apple stock 2 months ago, and then it went up. And then it went down a little bit, and then I bought more, and then it went up more. And there are machines that are doing this too. It's not just people. I'm starting to wonder how much of this stock market rise, especially in the S&P 500 index and the NASDAQ especially, how much of this is attributed to momentum. I can't tell you how many traders and investment strategies try to use momentum as their primary strategy for investing. And it's great, it works until it doesn't, and then it goes the other way. And then all of that momentum you had pushing higher and higher and higher, it can reverse, where the momentum actually drives it lower and lower at a faster and faster pace, making it possible actually to go way below what would be even appropriate valuations, as it's happened many times in the past. And, you know, I am shaking in my boots too, seeing valuations go up this high. I'm not short, but I'm certainly not long. The next chart I'm bringing up is HYT, high yield corporate bonds and preferred shares. This had a very nice pop today to the upside, although overall we're not seeing much of a breakout of a pattern of any kind. And so I'm getting a sense with my crystal ball that it wants to go sideways still, at least for the moment. Again, I think that there should be more fear in markets than is priced in, and I do expect this to drop in value. But for now, the music's still playing and stocks are still going up. Moving on to the dollar index, I want to note that unlike HYT, you know, we have what's called an inside day. Not that this is related to HYT anyway, but just on a pattern basis. You know, you had this falling channel here, which we broke out, retested, and then went up. And then today, this little red candle is considered to be an inside day. And so there's a pretty high probability the dollar tomorrow should continue higher here. Another possibility is another inside day inside of this candle before breaking to the upside. And if that happens, it could actually, you know, again, I've said it on the show lots of times, it could mark a top in the S&P 500. I'm expecting it, along with, I think, a lot of other people. But, you know, it doesn't happen until it happens. So we'll let the music keep playing, I guess. While it seems like there's no fear in markets, the fear and greed index is in fear. You know, part of the reason for this is because of the mega caps having so much weight in the S&P 500. You know, I generally use the S&P 500 as a general overall gauge of where things are, but if you don't have the S&P 500 yourself, you have other funds, maybe equal weighted index or, you know, other things, they're not performing nearly as well. A lot of these have not even reached new highs since 2021. And so, you know, there's not a lot of breadth. So not all stocks are as overvalued as these mega caps. But when you have this amount of overvaluation in mega caps, and whenever that does eventually reverse, which it will, it has to at some point, it can drive the entire market much lower. And so yeah, I think it's a good time to be careful, in my own opinion. I wanted to bring up ARK investments. This is ARK K, the flagship fund. I wanted to bring this up because I noticed that we've been coiling up for a while. You know, much of the time, ARK K is very volatile. You look back to August of 2022 right here, until December, and you saw we went from over $50 a share down to $29 a share. I mean, it's getting close to a 50% drop there in a relatively short time. But more recently, I'm finding it interesting that we have been really coiling up here. And so, you know, what typically happens for pattern-wise, you know, you have big movements and you have consolidation, and the longer they consolidate, usually the bigger the eventual break is. And so, like you can see here, we had a long consolidation and a big break, and then again here, consolidation and fake out to the bottom, and we went up. This thing really likes to fake people out, it seems. And we've gone down, consolidation, 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 all within, relatively speaking, a pretty tight zone. And so it will be interesting to see if it's time for this thing to break to new lows or maybe break to new highs. But there's a lot of potential volatility built up in ARK Invest right now. At the beginning of the show, I mentioned patterns in TLT, and I want to show those right now. I spent some time and came up with these very specific and very accurate lines on this chart. Sometimes I'm crude with my lines, and I'm being less crude with them, especially for this, especially considering I currently have 50% of my portfolio in long duration bond funds, some of it with more leverage than others. But the point is here, from a longer term perspective, starting in 22, we have a pretty clear shoulder here. We hit the neckline exactly here. We have a pretty clear head here, and this would be considered to be the pivot where we would draw the neckline. And if we are to break out of this line right here, so that would be a price of over $95 in TLT, we could easily expect this to really go significantly higher in a relatively short time horizon. Now zooming in here, there's two other parts to this. On a shorter time basis, we have another head and shoulders. Before I explain that real quick, I just want to note that when we zoom out further on this chart, this is a significant like bottom. Like we've been going down for quite a while now. And so that also helps give this inverse head and shoulders more viability and more of a probability that when it does break this line, that it can really rip higher. On a shorter time frame basis, we have another head and shoulders within the head and shoulders, also, you know, near lows basically. We have the neckline right here. We have a very clear shoulder ahead. This pattern starts, by the way, in March 2024 if you want to find it yourself. And then we had a right shoulder, and then we had a clear breakout, a clear retest, and then a continuation. And I just want to note that the target for this pattern, if I take the neckline to the head and I draw a line and I drag it to the breakout target is above this line here with this longer term head and shoulders pattern. There's just a lot of patterns putting a lot of bullish potential here in TLT. Now, I've mentioned this before, and I'm going to mention it again. This is still TLT. There's a major divergence going on between the RSI and the value of TLT here. If I take a look at the bottom, this bottom of the RSI, we can see pretty clearly that we have a higher low here from the end of 2023 to the end of 2022 to the end of 2023, and we have a lower low in the price. This type of divergence, and not only that, we have a higher, well, we have a high here, very clear, right? And a higher high here. So the relative strength index is showing strength here, all while the price is dropping. This is a humongous divergence over a larger time frame. Each candle in this current view is 1 week, and so really all of the stars are aligning for this to have a major breakout here in long duration treasury bonds. If I am personally correct about this, I will be profiting very handsomely, in the words of Graham, from this investment operation. Not investment advice. Moving on, another chart that I keep track of because it's I have 5% of this in of my portfolio. This is REMX, rare earth metals, lithium, all of that. Remember how excited people were getting about lithium, and it seems to have gotten forgotten about if we scroll out here. So it froze. There we go. So scrolling out here, you can see this current view of the chart goes back to 2011. You know, we had a pretty major like pivot low in 2016, and then we had a nice run in 18. Another pivot low, bottom of the COVID bust, you can call it, and then major run up, and we're actually almost back down. We're getting closer anyway to the COVID low range. I just want to note that you know, right now on a daily time frame, at least, let's see if we can jump to the 3-month view. Are we back? Hold on. So scrolling back in, you know, we are pretty much at a very recent low. This is back in February 2024, and so we're back in that range. If I didn't already have about 5% of my portfolio in REMX, I would be personally buying here. I think this is a pretty awesome opportunity, a very undervalued and underinvested space. Meanwhile, SMH Semiconductors just keep slapping me in the face with their new highs every. I'm not short this in any kind of way. I don't have puts, not yet anyway, in this or any short positions. But SMH reaching again all-time highs. My understanding is that there's a little bit of broadening of investment in other semiconductor equities right now, and so that's sending this higher. Back to that feedback loop idea with momentum, another way to think of it is, oh, well, it's been going up, and so it will continue to go up, and then it went up, so then it'll keep going up. It's like the way the machine is working right now. It's like a broken machine. Like, I don't know, it makes me think of like a guy in a rocket ship just going up and thinking he's going to go up forever. The fuel will run out, folks. They thought this way about the railroads in 1929, and when I don't know when. Can semiconductors double from here, triple from here? Sure. Why not? It's an amazing time to be alive. Similarly, in the Qs, the NASDAQ, we again have all-time highs. Meanwhile, Robschild is buying Nissan stock. Again, this is looking dirt cheap to me. It's a company that makes money. Again, I'm not looking for this to go to the moon. I'm not looking for it to get to a PE ratio of 20. I'm not looking, for a 20x return. I just want it to get to like a somewhat normal level of maybe like a PE ratio of 7 instead of 4 or 5. So, right now it's under $7. I'm looking for the market to wake up and realize it's worth a little bit more and get out around $9. That's all for today's show. I hope you enjoyed, and thank you for watching. Robschild.